Bitcoin's macro structure is tightening up. Time to prepare for what comes next. Hey guys, it's Keith Allen. Hope everybody had a fantastic and very Merry Christmas. Came back from the break, little holiday vacation late last night, and I'm not going to lie, still kind of wish I was in vacation mode. But let's face it, there's a lot going on here. Price has been boring for a lot of people. I understand that, but there are some things happening that we need to pay attention to because seeing lots of similarities, and this is no secret, right? We're seeing this across the interwebs right now. Lots of similarities between what we saw in a prior cycle back in 2021, but there's also some key differences. So we're going to highlight the similarities and the differences in this episode. But more importantly, we're going to talk about what comes next, what key levels we need to watch to really determine where things are going to go from here. I mean, we all have our assumptions, but let's face it, now's not the time. Now's not the time for narratives. Now's not the time for speculation. It's time to watch the charts, watch the structure, and let the data do the talking. Before we climb in, as per usual, do me a favor, smash some buttons, help me grow the channel. I'm working hard for you people. And I drop the free alpha on the regular. All I ask in return is that you engage with the video. In fact, it makes it even more fun. Live chat is open. It makes the show more fun for me and better for you when you guys engage. So by all means, if you've got questions, ask them. I'll do my best to answer. If you've got insights, share them. We all learn here together. In fact, why don't you take a second? I'm going to give you a few seconds and share this thing with somebody. If you got a trading buddy, if you have a group that you engage in, share the stream. Let's get a few more people into this, and we will get started. And while I'm waiting on that, a little bit of housekeeping. Getting to the final days of the year, final big sales, right? 3Com is having their sale. TradingView having their sale. Material Indicators having our sale. We've had this huge holiday sale going on, 33% off of everything, all plans, including monthly and lifetime plans. That's been going on for the month and coming to an end here. But this last push, also having a flash sale, 40% off of everything Premium Plus. And so if you're looking for, kind of an entry into Premium Plus, we have a new 3-month Premium Plus plan you can sign in on. But you can also extend your savings up to 3 years. You can lock in price and the alpha for 3 years with Premium Plus. The longer you subscribe, obviously, the more you save. So take advantage of those deals. Links are in the description down below. All right, let's get right into it and start sharing a screen. Let's go with the candle chart for starters. The structure looking rather similar. I'm actually surprised that we've been in such a tight range here as of recent. As you can see, price is holding above this 100-week moving average. We've been looking at daily and weekly timeframes here. I want to show you things across timeframes right now. We have a wick that we got today that came through the 21 and wicked all the way to the 50-day moving average. It's the 50-week moving average that really defines the macro trend here. So don't get excited about a touch on the 50-day. But the rejection is noteworthy. What else is noteworthy is that we have a new block of ask liquidity showing up on fire charts. That's 111 million up here, 112 million up here at the 100K level. And why is that important? Well, it's important for a number of reasons. Number one is that 50-week moving average currently sits at about 102K. And so if that were to stay there, that would prevent price it would be a barrier anyways, to price getting up that high. That's one thing. But it's also worth noting that I don't believe this has any intention of getting filled. This is here to herd liquidity. This is here to Possibly it's here to push price down. Although I would think it would want to come down lower to really push price down into this bid liquidity down here. That's part of it. It could be here to protect somebody's options trade on a put. It could be here to protect a poly market um, prediction trade on where we close on the day, the week, the month, the year. Any of those things could come into play. So again, if price were to approach this, I would expect this to get pulled before it gets filled. I've been wrong before, but this has characteristics I've seen many, many times before. Speaking of things that we've seen many times before, I want to move into the back to the candle chart here and show you, we're seeing a lot of speculation, and there's certainly some truth to the fact that there are some similarities between what we see now and what we saw around the 2021 top. Okay, and so let's look at that. In 2021, we had a rally that went up to almost 65K, and then we had a huge breakdown. This was like this was a big dump. This was 55%. And then we had a recovery. And so a lot of technicians considered this to have really been the real market top, and that this was a manipulated relief rally that took us to a new all-time high. Maybe it was, maybe it wasn't. That's neither here nor there. What happened kind of behind the scenes, or behind the candles, I would say, is pretty important here. And I want you to note something here relative to what we have now. So a lot of people say that this is similar to what we saw back in January, when Bitcoin had a breakout above the above that 21 top and made a new all-time high. At the time, excuse me, at the time, people were first saying that this looked similar to this, and you can see this took a lot longer to play out. This was from April, mid-April to November. And then we saw the breakdown, right? But notice the moving averages here, and notice them here. And I'm going to show you this on the weekly time frame here. Is going to make more sense. But just in terms of similarity of the structure or the price action, I would say it was this kind of double top scenario. Looked like a double top, and then we actually made a new all-time high here at 69K. Here, this looked like similar, right? Double topping, and then pumped up to a couple of new all-time highs here. Current all-time highs now at 126K. So let's look at this on the weekly time frame, because this is where it gets more interesting to me. So this is, again, and everything's labeled here, so it should be easier for you to see. Here's the 2021 top, right? Here's that little, double top-ish. It's not really a double top, but it just, makes it easier to explain that way. So we had this scenario, but notice the moving averages. Moving averages were still bullish, right? There were no death crosses. Everything was unwound. We flirted with a death cross here, but escaped it, and price held. But it wasn't until we had this first breakdown through the 21 and 50, really the 50-week moving average, that we saw a little bit of a dip on the weekly RSI, dipping below this 41, but that was a quick recovery. Notice it recovered very quickly here, and price then came back, tested resistance at the 50-week moving average before breaking down, and then we had a real cascade, right? We had a death cross between the 21 and the 50, and price broke down further and further. The weekly RSI came down below this 41 level, further and further, right through this cascade. We had a little bit of consolidation here. I honestly thought, we broke through the 200-day moving average, 200-week moving average as well here for the first time in Bitcoin's history. And And then we got a little bit of a headwind, actually a big headwind from the FTX crash, took things down even further to 15.5. Had we not had that FTX crash, I think that price would have consolidated here in that 19K range and then boom, gone up. So this was a bit of an anomaly. Nonetheless, the important part here that I'm trying to point out to you is that the RSI was different here than it is now, right? The RSI held through all of this. And then we didn't actually see the real breakdown until this death cross. So let's fast forward. Look at where we are now. All of the moving averages are indeed unwound. And so if you look at where things are now, let's first go to the RSI. And as you can see, we've already lost the RSI. Back when we dropped through the 50-week moving average decisively, we lost the RSI. We've retested it and lost it again. We're still well below 41 on the RSI. Interestingly, we're holding support with a series of higher lows since that flush to 80.5. We're holding support at the 100-week moving average for now. Support here, good. Going back to 2021, we also had support. In fact, it didn't even come into, excuse me, I went back too far. We really didn't even get that close to the 100-week moving average. We had a couple of close calls here. We consolidated and then came back, tested resistance at the 50, and then ultimately broke down on this death cross. So look at where we are now. Support at the 100. Have not yet had a test of resistance at the 50. Doesn't mean we have to have one, but I'd like to see one. I expect to see one. And then look what's happening. I've extrapolated these lines out a bit further. These are the trend lines. The green is the 21-week moving average. The red is the 50-week moving average. And by my estimates, we are 2 weeks or so from an imminent death cross. Now, could a spike back above these moving averages pull us out of this nosedive? Potentially, it'd have to be a real big spike, right? I mean, it'd have to be a real big move. And certainly there are things that could trigger that. Certainly there are catalysts that could trigger that. Could a peace deal in the Ukraine and Russia make it happen? Perhaps. I don't know. Could there be how should I say, a manipulative event? Well, that's always possible. Hey, there could be a actual legislative policy change. There could be a declaration of a Bitcoin reserve. There could be the Clarity Act actually making it through the Senate. None of those things have happened yet. So those are all things that could be potential catalysts for recovery. But those are very optimistic. And we're not going to speculate. We're just going to watch the charts. And what we're seeing right now, good consolidation here at this, we'll call it 86.5 level and higher. We're seeing some consolidation. The 100-week moving average right now sits at right about that level, right? 86 even. So, I had labeled this, a lot of you guys had probably seen this. I took it off the chart to clean things up, but I'd labeled this a no trade zone. It was for me anyways, because I just did not see enough, how should I say, enough room, enough meat for this trade. Do I have these other trend lines in place? Let's see. No, that's not the one I want to get rid of. There we go. So this has been a no trade zone for me because there just was not enough room, not enough meat for a trade for me. I don't consider it a no trade zone all through the entire range of this cross, because it's widening and there's certainly some swing trades that can be taken. But look at what's noteworthy here. Rejection from the 50, rejection from the 21. These are daily moving averages. We go to the weekly. We have support at the 100 for the moment, with no test of the yearly open, no test of the 50-week moving average, and this is something that needs to happen, right? For us to flip back bullish, we need to see the price recover the 50-week moving average, and we need to see RSI recover 41 on the weekly RSI. Now I want to take you another time frame deeper. Let's go into the monthly. Look at what's happening here. As we speak, we are threatening the 21-month moving average. See how often that's happened. Well, it happened in the last the last bear market, after we lost that, after the 2021 top. So we could be headed to that, right? There's no confirmation yet. It's not the wicks that count, it's the closes that count. But I certainly don't love where it's heading. Let's see where the 200-week moving average sits. Okay, that's here at 56. We know we have some potential double bottom support in a number of places, including here around 75K. I call that a double bottom because on the daily time frame, you can see we double bottom down here. This would be a good bounce point, but so would 69K. So would flirting with that 2021 top at 69K. So I don't rule any of this out, or even lower for that matter. Here's where that 21 week moving average sits. So all of this is potentially in play if we get if things continue to break down after this death cross we talked about on the weekly time frame. Now let's look at liquidity again, and it's pretty easy to spot the path of least resistance at this stage. We do have some bids stacked in the we'll call it the 75 to 82 range. No concentrations as big as what's here. However, I think we're going to see this moving around, to be honest with you. I think we could see it come down and push price lower, maybe to get filled down here, or I could see it also getting roof pulled. So we'll keep an eye on that. But what's interesting here is what's happening in the order flow with the CVD. And I'm going to take out all of the small classes, and let's just focus on the whale classes here for a moment. And as you can see, there has actually been some buying in this consolidation range. Since mid-month, pretty much, you can see that when we hit lows, these dips get bought. And so since I'd say December 18th, looks like purple whales have been buying. Not a ton, right? Not a ton. But they have bought back about 30% of what they had sold in the in the prior time frame. So they had, bottom line is they've started buying more. And the brown mega whales also started buying more. So will be interesting to see if this continues. My expectation is if we get a pump up to this 100K level, or up to even better, the 102K level, if we get a pump through that, even the yearly open, I think there's a chance we're going to see some selling and some profit taking, and at least that's the plan I have. And from there, I think we're going to see a bigger flush. I think this death cross is imminent unless we have that miracle catalyst that shows up. And I think that we are in a confirmed bear market, and this would confirm it. This would be another validation, another confirmation of the bear market, and a deeper pullback coming. So that's how I prepare for this. And in terms of forecasting what happens next, here's what I am going to introduce into the mix. Two indicators I want to bring to you that, okay, these moving averages are pretty basic. They're free. Everybody can have them. Everybody can add them to their chart. And they're very, very helpful. They're very telling, right? If we lose this, we know it's going to be hard to recover. Likewise, if we reclaim this, we know that that's what a recovery looks like. And so we're watching that very closely. But parallel to that, I'm watching two other things. One is trend precognition. And I'm watching trend precognition in higher time frames. And this indicator really thrives in higher time frames. And so I have two versions of this on my chart. I have this A2 plus algo with the arrows up here, and I have the A1 algo with the dots down here, and the A1 slope line, which is a real-time indicator. And so whether or not we get a hard signal at the monthly yearly close, then I'll still be watching the A1 slope line to see if it's on an upward trajectory or a downward trajectory, because it is indicating momentum in real time at any given time. And if I took this down to a 30-second ticker, you would see it flickering and moving, just to show you that this is actually happening in real time. This thing's going to move every candle. So this is like the signal in between signals. But what I'm really looking for and what I'm really hoping for is to see new signals either up. See, there it just moved. See new signals either up here with a short signal, down here with a long signal, or on the arrow chart. And so what happens here, not sure why everything just turned red. I have something enlarged on my chart. Let's just take that out. So let's go back to monthly. Oh, it's because I it's because I was on such a small time frame. That's why. Oops, that's not what I intended to do. That's what I intended to do. And so let's go back to my weekly and monthly and yearly. Okay, so if we go to the monthly chart, what's interesting about this upcoming candle close is we have a monthly, a quarterly, a yearly, and a 6-month close and open happening here at the December 31st close. So each of those time frames and the year, each of those time frames has the potential to give us a new signal. So I'll be looking at the quarterly, and you can see, this is obviously accurate. I'll be looking for a new signal here. I'll be looking for it on the 6-month chart, and I'll be looking for it on the 12-month chart. Now, it takes a lot of history to get a 12-month signal, and we've only ever had one. So this indicator thrives on historical data. But now that we've made it this deep into this indicator, it can actually give us another signal. So we'll look and see if it does. The A1 slope line is not going to give us anything here on the yearly time frame. Doesn't look like just not enough history yet. We'll see what happens after the close. But the 6-month, you can see we had a signal, and even though this is a red candle, we did get a new all-time high out of it. So it's actually is valid. And on the 3-month, so those are the things that I'll be looking at. The other thing is timescape levels. And if you haven't seen timescape levels, this might actually blow your mind. Let's go back to lower time frames, and I'm going to introduce the timescape levels to you. I'll take the trend precognition off the chart so we can clean up our view a little bit. So here's what I expect to happen with timescape levels. Timescape levels will print right at the open, right at that January 1 open. We're going to get a new timescape level for the yearly open. So I think, well, I'll tell you what I think is going to happen before I wrap, but I know that we're going to have a new timescape level. Where that is, nobody knows from here. But there will be two timescape levels in January. One will be at the yearly open, like you see here. We have the January 1, 2025 open. and one will be on the first Monday of the year, and which will be January 5th this time around. And historically, what has happened is if price after the timescape level opens, if price goes up, then that first week, uh, so far every single time there's been a rejection. Likewise, if price goes down before the Monday open, then historically there's been a recovery. So we'll be watching that for a short-term preview of what's going to happen in the first first part of the year. Now, in terms of what I expect to happen between now and the yearly close, obviously, I'm watching all of the levels that I just told you about. I'm watching these timescape levels. I'm watching these RSIs, and I'm watching these. I'm watching the weekly RSI, and I'm watching the moving averages across time frames. And so, I don't like the rejection here from the 50 and 21 daily time frame, but I do like the support here at the 100-week moving average. I don't like that we are losing support at the moment on the 21-month moving average. That one, of course, still has time to recover. So what I think could come into play here, and there is a degree of speculation here, and like I said, this isn't a time to speculate. It's time to watch the charts. But here's what I'm thinking would happen, but I'm not married to this narrative because I'm not married to any narratives. I'm watching the charts to see if this is going to play out. But as long as we're holding above the blue 100 week moving average, there's a chance for this to happen. And that would be a retest of resistance around the yearly open. I expect that sometime between now and December 31st, we're going to see an attempt for a green candle close. As you can see, we're currently red. Where do we need to close for a green candle close? We need to close above that yearly open at 93.3. That's certainly in range from here. So that's the first thing I'm looking at. Can we do that? And if that happens, how do you know if that is just another relief rally, exit rally, short squeeze, et cetera, or a real recovery? And the answer to that is, well, you might not know for sure, but some clues would come in the shape of the weekly RSI and what we see happening in the order book. Because the weekly RSI could wick up above that in that time frame and still, end up being a fake out. But if we see more liquidity, if we see more bid liquidity coming in here, we see more buy volume coming in here, those would be clues that it would be a sustainable recovery. If we don't see that, if we still see a lot of thin space between, support between thin support between where price is and where bid liquidity really starts to stack, then I'd be concerned that things are going to flush out. That's how I'm looking at it. Looks like we have a flow state. Hey, how are you? Thank you. I appreciate that. Hope you and everybody else had a great holiday, and I'm wishing us all a fantastic, healthy, happy, profitable new year, no doubt. And if we continue to pay attention to each other and continue to follow the data and ignore the hype, then we can trade smarter together and we can make it a profitable 2026, even in a bear market. The things that concern me, I'm showing you right now, right? Look at this. We have thinning bid liquidity. Let's see if this moved up or if this just moved out. Let's see. This was 43 million. It dropped back about 20 million or so. And this does not look like it was a $20 million bump. So some of this could have come up here. But I don't know. Let's see if we move in on time frames, if we can see that any better. Let's get a little contrast in the chart and see if that makes any sense. Um, let's go to the daily. So for the moment, we're holding this support above the 100 uh, week moving average, and it's good to see support, stack bid liquidity stacking in here to help do that. Um, you want to see more is the bottom line. You really want to see more. The path of least resistance at the moment is for another trip up to that 90K level. So this is why I think, and of course, that yearly open is up here around 93. You can see bids stacked at 92, trying to potentially block that, but um, this can all move in a hurry. So I'm watching this across time frames to see where the bids and liquidity is moving, to see what the order flow is happening with order flow here. Um, but there's no question that this dynamic is going to change a lot here in the coming days and weeks. And again, I want to make sure you understand what this means, because this gives you, if you pay attention to this, if you pay attention to what I'm telling you here, this gives you time to prepare rather than react. And I want you to prepare for this death cross to happen, because this looks pretty freaking imminent to me. I mean, it's going to take a miracle for this not to happen. I mean, like God candle, that goes beyond yearly opens and goes beyond the 21 week moving average, is what it would take. And so if that doesn't happen, if that miracle does not present itself, then you need to be prepared for more downside. And that also means, if we do see these recoveries, you should be prepared for what you want to do with that. Um, I would not, in this tight range, be eager to short as long as we're holding up above this 100 week moving average. But when you get these wicks, um, those those present some opportunities. Just don't get greedy, and be prepared to get squeezed or to add to your position and dollar cost average your way in and out of your trades. So that's what I'm looking for. In a perfect world, I would see a move up into this yearly open range and maybe do some more profit taking, and then we have the big dump, because this just looks imminent to me. And it looks like this would be mid January, right? So I said a couple of weeks, so that's about it, right? 2 weeks out is where this would happen. So be prepared for that to happen. I've given you all the hints and clues I can give you to prepare, and I hope that that helps you out. Um, again, I could be wrong, and well, flow state, you're definitely right. Health is number one, top of the list for all of us. I could be wrong about how this plays out, so don't take it. Uh, don't take it as advice. Take it as insight, and do with that insight as you wish. I'm just telling you that we've seen this before. The patterns are very, very clear. The signals are very, very clear. We could get trend precognition signals. This could also change my approach, right? So come January 1, if I'm staring at new trend precognition signals that are long on the higher time frames, right? I mean, if I get a long signal on the daily time frame, that's not gonna change anything for me. But if I start seeing them on monthly or quarterly or 6 month time frames, that changes things for me. I have a lot of confidence and conviction in this indicator. I have been a student of it for many, many years before we even started the company. I've been watching this since like 2018. So I do have confidence in what it tells us. Um, Flow state asking what level needs to clear to prevent the death cross. Um, well, like I said, it's going to take a lot. It's going to be a big, violent move, explosive move to do that. You can see this death cross is imminent at this point, and so I think to pull us out of this nosedive here, we have to not only clear the 21-week moving average, but we probably need to clear the excuse me, the Q3 timescape at 109, and so getting up into the 110 range, 110 to 114 range, could potentially pull this out of this nosedive. And even if it doesn't, it could just make it a shallow crossing, right? That doesn't last very long. There's been periods where we've had those shallow death crosses that didn't last very long, and that was not the end of the world. So that's that's possible. Um, still, I mean, just the sheer fact that those things happen, right? When it happens, it's going to trigger algos, whether it's a deep death cross or a shallow one. When it happens, it will trigger algos, and we might see a wick up, a fake out before the breakdown, but the breakdown will come. It always comes. It's the nature of the beast. So that's what I'm looking at. Hope that helps you out, and gives you some insight as to what to look into, what to be watching here as we close out the year and set our sights on 2026. Again, I want to thank you guys all for your ongoing support and for the follows and the shares and the likes and the engagement, especially for the engagement. If you're not doing so yet, do yourself a favor. Join us in the Telegram community. You can find links to it in the descriptions, and you can find links to it on the Material Indicators X page, on the Material Indicators Coin Market Cap page, and on the Material Indicators websites. And don't forget, two awesome sales going on right now, about to end. 33% off every single plan, including monthlies and lifetime. So if like you've been watching from the sidelines and you think this looks like interesting stuff and you want to give it a try, you can do it cheap. Monthly plan, 33% off is 66 bucks on Fire Charts. If you want to go into the bigger plan, you want to go to Premium Plus, and that's the one I recommend because it's all the tools we make. Fire Charts 2.0, timescape levels, trend precognition, MTF mean reversion, the MI dashboard with tons of metrics in there. You can get into that now on a 3-month plan, or as much as a 3-year plan for 40% off. Again, links are in the description. Check them out. And with that, I'm going to wrap it here and wish you all a very happy, healthy, prosperous, and joy-filled 2026. Let's trade smarter together.